All right, we're live. We're live. Welcome to another earnings stream. What's up, y'all? We got some big names today. Swinging Bull here. We got people loading into the socials right now. We're streaming on YouTube and X. We got some good names. We got Netflix and United Airlines and a few others. Here, let me just do a quick rundown of who all's reporting. Netflix is supposed to report right now, so I'm going to go there here in a second. So is United Airlines. Both are at 4 p.m. Eastern. Netflix forecast for EPS is 55 cents. The forecast for the revenue is 11.9 billion. United Airlines EPS expectation $2.98 and 15 billion in revenue. Interactive Brokers is also reporting. Progress Software Corp. I don't think I've ever traded them. Hancock Whitney. And you can see some of the other ones. So a lot of financial institutions, banks, and stuff like that. But mainly it's Netflix and United Airlines. So let me just go to them. Of course, SPY and Triple Q sold off this morning because of uncertainty with the tariffs. Hopefully we don't enter a trade war with Europe over the whole Greenland thing. But that's why we sold off today. So we're just going to see if a bottom comes in. Triple Q trying to double bottom. SPY obviously sold off below their pre-market low. QQQ held up though. So kind of double bottom action on QQQ. We'll see if that holds or not. SPY wasn't able to do that. But yeah, just a little summary on what's going on in the markets today. It's uncertainty over tariffs with EU and over the whole Greenland thing. So we don't know. Is this just going to be a power play by Trump, to get the other countries to back down from the whole Greenland thing? We're going to have to wait and see. We don't know. But until then, not financial advice, but trade your portfolio accordingly. Maybe have some hedge trades in place. And while we wait to see, when the dust settles from all this, maybe Trump withdrawals. The tariff stuff he was saying about the European countries that are trying to support Greenland, and maybe it just goes away and the dip gets bought up. But, maybe we'll know this week. We'll see. But S&P was down 2%. NASDAQ was down 2%. The Dow was down 1.7%. VIX back over 20. The 10-year yield is green. So obviously there's money flowing into the yield, the treasury bonds. The dollar was down. So just kind of a little recap. Let me go to the sticks though for Netflix, because I believe their earnings reaction should be going on right now and looking like it's negative so far. Let me go 5-minute chart. Yeah, getting a negative reaction so far for Netflix. We'll find out why. Give me a few moments and I'll pull up the data, EPS, revenue, any guidance, anything like that. Over 350 people tuning in right now. Good to see everyone. Swinging Bull here with PB Alerts. Back for another earnings stream. So Netflix and United Airlines. Netflix selling off. It's down 2.5%. Still more selling coming in. So let me find out what's going on there. Give me 1 second and I'll get the data. And then we'll also find out when they're going to do their earnings web call and how to get there. I got United Airlines on the right. I just completed a successful wheel strategy trade, multiple trades that comprise of the wheel strategy in general on JetBlue. I always bottom feed on JetBlue when it comes down to like $4 or $5. Had a successful wheel on JetBlue and made about 20% on my money once the wheel fully rotated. So interested in seeing United Airlines reaction since I like to trade JetBlue. And so far, United Airlines is positive reaction. Let's go back over to Netflix because they're still trying to find the bottom here. And let me put this indicator back on there. I'm going to go. Okay, so that's 5-minute chart. All right, let me check Netflix for everybody. Find out why investors aren't liking this data. Let's take a look. Let's take a look. Okay. I'm going to go to their, okay, here, got some data here from Wolf Financial, one of our partner companies. They did double beat, but okay, I see what happened. They lowered guidance. All right. So that's it. That's really all it is. They lowered guidance. Let me put this, so they did double beat though, just so everyone knows. We'll just go over this real quick. I'll post the data in Discord as well for my Discord peeps. There's Netflix earnings. There's Q4 report. And I'll put this on the bottom of my screen. And oh, got a hot mic there. Let me turn that on. Okay, so let's go over this. The revenue line item. The expectation was 11.9 billion. They reported 12.05 billion. So they did beat revenue. EPS estimate was 55. They reported 56. So double beat by Netflix, but the catch, what's the catch? Why is it selling off? It's because they announced Q1 of 2026 guidance, and they double missed on those. Okay. So let me put this in the comments so everyone has that data on why they're selling off right now. We know they double beat, but this is why they sold off, because the Q1 guidance, the estimate for the revenue was 12.19 billion, and they lowered it to 12.16 billion. Okay, investors are not liking that at all. Also, the estimate for the Q1 guidance for EPS was 81 cents. They reported 0.76, so they lowered Q1 guidance for this year. Q1, they lowered the revenue and the EPS guidance. That's all it takes. So it really doesn't matter if they beat revenue and EPS forecast for this announcement. It doesn't hold any weight. If they mess with guidance in a negative way, that totally trumps that. So that's what's going on with Netflix. Also for Q1 2026, they're expecting operating margin to be at 32% for my Netflix investors out there. And also for fiscal year 2026 outlook, they're estimating free cash flow of 11 billion. They are saying ad revenue is expected to roughly double, and they are expecting higher operating income growth expected in the first half, in the second half versus the first half of this year. So Netflix beat on the Q4 estimates, but guided Q1 below consensus. But full year outlook implies strong second half acceleration with ad revenue doubling and free cash flow hitting 11 billion. So, you know, it's selling off in the short term here because of the Q1 guidance being reduced. I think once a bottom comes in, it probably get bought up pretty easily, I would think, because they are expecting a second half of 2026 acceleration with improvements. And so I think it'll be short-lived. We just need to wait for the selling to stop, or at least slow down. Wait for a bottom to come in, maybe even wait for some higher lows to start printing. And yeah, I mean, I could see investors looking at this as somewhat of a discount from where it was trading at today. It closed the regular session at $87, basically down 1% on the day, as was most stocks were down today. Might not even been any fault of Netflix why they were down 1% today. It was just kind of market-wide selling because of the tariff uncertainty with the EU and the Greenland deal. So, you know, it's trading it's trading at $83 a share right now. Basically, it's down 4.5%. But good to see everyone in the Discord. Mad Mavericks here, Tamara's here, Shin's here, my buddy Rudo Trades here. Hope you made some nice profit with me on that JetBlue wheel. And also the UMAC wheel, that one paid 20% return on capital as well. That was a nice trade. My buddy Ninja's here, MG, Ghost Chicken, love the name. Good to see everybody. Yeah, Ninja says, wouldn't be surprised if Netflix gets bought back up tomorrow morning. Yeah, like I say, I mean, the reason why they're selling off is because they reduced Q1 guidance. So that's kind of more like a short-term looking view, but they expect things to, dramatically improve for H2, which is second half of this year. So I could see maybe investors trying to front run that. So yeah, I mean, maybe there is some dip buying that'll happen between now and tomorrow. So far, we haven't seen the dip being bought up yet. So just be a little patient. Like I say, wait for a bottom to start forming. Good way to recognize that is wait for some higher lows to start printing. And you can see it's clearly will start reversing, but right now it's still trying to find a bottom. Let's go bigger time frame and see where the bottom might be. And then I'm going to go over to United Airlines because they're nice and green right now. They're up 2%. We're going to go over there next. But this is the daily chart on Netflix. And I'm actually going to use my volume profile to just get some quick levels. Let me turn that off, turn this on, and now we got some volume to kind of look at here. I like this view here. Let me go back a little bit here. Let me zoom out a bit more. Actually, let me zoom in a little bit because I just saw some nice levels on this volume profile. There we go. So, I really don't like Netflix below $84, which it is right now. You can see there's kind of some space in the volume profile, and this is price action from September. So what's that, like 5 months of price action? You can see this blue line. That's where it's at right now. Now, there could be some horizontal support possibly from where it bounced back here. This was about, let me see here. This was about 1 year ago when some demand came in around there. That was around $82 a share. Trading just above that right now. And then in April, it found a bottom there. Most stocks found a bottom in April because that was, April of last year. That was kind of the end of the 20% market correction we experienced. So that, I know it's trading at 83 right now, but I'd be looking at $82. It's trading right above that right now. I'm going to mark a line at 82 just so it's on my bigger time frame. So when I go to the smaller time frame charts, boom, I'll see my level from the bigger time frame. Now, if $82 doesn't hold, this thing could go to the mid 70s, I think, just because I was looking at there's kind of a bit of a gap in the volume profile. So I'd probably put my next level down, probably around $75 right here. And then 70. So, pretty easy levels to remember on this one. And this is just based off of volume and price action. That's all it is. Ninja says, you grab shares here. It's sitting within the Bollinger Band. Okay. Good to know. I use the Bollinger Bands every now and then. I like using the Bollinger Bands when I'm picking out a strike price on my cash secured put trades. I like to sell my cash secured puts when the underlying stock price is like mid to lower Bollinger Band. And I saw a cash secured put when the price goes back above the midline and to the top Bollinger Band, you usually get some good profit on those cash secured puts trading like that. So Bollinger Band definitely is a great tool to use in my opinion. So Rudel said he beat my return by 2% on JetBlue. All right, well listen, I'm glad you made more money than I did. I love when the members make more money than I do. And I always tell the members, use me as a benchmark. If you can beat my returns, great. Even when I alert something in the Discord, you don't have to enter those right away. If you want to wait a day and see if you can get a better price, go for it. But, I've been on a pretty nice run with my spread trades. I'm 7 for 7. The last spread trade I lost was 8 spreads ago. And that was a SPY hedge trade that I put into place. I think it was last November when we had a little bit of selling coming in. But, my hedge trades, I really don't care if those go to zero because that's just me buying insurance, really. But other than that, we're on a nice run on spreads. And I'll go over that towards the end of the stream here. But now that we got some levels marked out on the bigger time frame, I think we can Probably go back intraday here, turn off the volume profile, and we'll go 5-minute chart. Okay, so it came down to around $82.60, around there. There's a little bit of buying coming in right now, so that's, hey, that's something. Probably throw a fib on this just to kind of see where some levels are. And I'm not going to go to, I'm not going to count this upper wick because that wasn't the right move. I think what I'll do is I'll put it to right where it closed the regular session, right here, 87. So yeah, this lines up pretty good here. Go 3-minute chart. You can even look at the 1 minute. I don't really use the 1 minute chart too often, but in a situation like this where the earnings data just got dropped, you know, 1 minute chart's kind of the only time frame we have to kind of determine some sort of price structure. But you can see here it's dealing with 25% retrace. That's right at around $83.70 a share. Like for price to get back above there, so we can make sure this doesn't turn into a dead cat bounce and it comes down and tests after hours low again. Look at United Airlines. Still, I'm getting some bullish readings on a lot of these indicators here, so that's good. You got some nice buying pressure coming in on United Airlines. I'm going to go over them here in just a second. So again, just to summarize Netflix, they did double beat. They beat EPS expectations and they beat revenue expectations for this, you know, for the Q4 data. However, they lowered Q1 guidance. They lowered the EPS and revenue guidance for Q1 of this year. We're in Q1 right now. That's why it sold off. So a little bit of short-term selling. They are expecting to have a strong second half of 2026. So like I said before, I could see investors maybe trying to front run that, expecting that the second half of the year is going to be good. So like I say, this could be short-term pullback. It's working on reclaiming 25% of the selling right now. Fib levels lining up very nicely with where the price is at now. So I'd like it to, you know, it's above it now. It's printing a green candle right now above it. So that's good. So my next resistance level is going to be just above $85 a share. That's going to be the 61% retrace. If it can get back up to there, my confidence would definitely go up that this, in fact, is going to retrace and might even come back to baseline to 87 by pre-market tomorrow. But we don't know that yet until that level gets tested, and it's still got a bit of work to do before it gets up there. Still dealing with this 25% retrace. So if they can take that out, then, you know, my confidence will come up a little bit. But like I said, still, it's not out of the woods. I feel good if it comes back above 85. I think this will be short-lived, but we'll see. So that's what's going on with Netflix. Let's find out when they're going to do their actual earnings web call. Ninja says, if SPY manages to break 680 or reaches 682, market could have some recovery tomorrow. Yeah, maybe. Let me look at that. So SPY's sitting here in after hours at 678. So we got a few more points before it comes back up to 680. Kind of lines up with my 21 EMA on my 15-minute chart. So we'll see. All right, so and then we're going to go to United Airlines. They're catching a bid right now a little bit. They're up over 4%. They're up $5 a share right now. Look at that. So I'm looking forward to digging into United Airlines earnings data and seeing why investors are loving this so much. It's nice to see some green on a day like we had today. So this is nice to watch. And I'm going to go to Netflix's investor relations page. We'll find out when they're going to do their call because I know everyone wants to know that. Okay, let me just go here. I'm going to bring this aside. I'll leave Netflix price on the left here. And here's the basically the press release here. So we're gonna see. Let me look at a few other things real quick. Got a letter to shareholders. I actually want to go to investor events right here. Okay, so that's where I was. Video interview. Is this pre-recorded? Nope, this is the actual call. So they're doing their earnings web call right on YouTube. So that's good, easy to access. And you can see a little countdown right here. So they're going to do their call in about 25 minutes. So that's at 4:45 p.m. Eastern. And Netflix did get back above that 25% for now. Actually, it's being pushed down a little bit, but yeah, it's still kind of fighting with this. It's like a right under 84 level. So anyways, 4:45 p.m. Eastern is when Netflix is going to do their earnings web call, and it looks like it's right on YouTube. So here, I'll put this YouTube link in the comments so everyone can get there if they want to watch it. And still got 25 more minutes before that goes down. And also, I'm going to put the link for their investor relations page. Let me actually just go to the overview here. This is the link where if you want to dig deeper into their earnings report, you can go there. I'll put that in the comments as well for everybody. And then you can see the go to news and events, financial releases, and you can see the so Netflix and Warner Brothers. This is just another news event. Discovery amend agreement to all cash transaction. Okay, let me go back to investor events, letter to shareholders, and then you can click on financial statements. That's going to be an Excel file. Okay, for the financial statements. So you can download that if you want it. Let's look at the letter to shareholders, see if there's any commentary from the higher ups before they actually do the call. So they said, in 2025, we met or exceeded all our financial objectives. Let me zoom in on this a little bit. There we go. For the year, we delivered $45.2 billion of revenue. That is up 16% year over year. Look at Netflix getting rejected from this 25%. That's why that level is important for retracement purposes. It's having a tough time getting above and holding above there. So let's keep your eye on it and see if it turns in, if this is going to be a dead cat bounce. It's going to come right back to after hours low and probably make a new after hours low. We'll have to wait and see. About 20 more minutes before they do the earnings web call. Maybe there's a secondary move when they do the web call. We'll know soon. But there is growth here on the revenue. It's up 16% year over year. Ad revenue rose more than 2.5x. In Q4, revenue increased 18% year over year. See, this is fine. I mean, they're highlighting the revenue growth year over year numbers. They're not really talking about the Q1 numbers, are they? Q1 2026, they reduced guidance. Sometimes you see that. They'll highlight all the positive stuff and they'll put the negative stuff like in one little sentence at the bottom. So anyways, they're highlighting some of the growth, the revenue growth. They say engagement remains healthy. They said in the second half of 2025, view hours increased 2% year over year, driven by a 9% rise in viewing and branded originals. Okay. And here's the 2026 focus. And they're going to be focused on improving the core business with an increasing variety and quality of series and films, enhancing our product experience and further growing our ads business. They're going to be in 2026, they're going to be focused on building out newer initiatives like live with events, including the World Baseball Classic in Japan, expanding into more content categories like video podcasts. That's interesting. And scaling our cloud-first games strategy. I think I saw something like you can play Red Dead Redemption on Netflix now or something. That's like kind of slowly getting into the gaming sector. They're also going to be working to close their acquisition of Warner Brothers. Okay, so sustaining healthy growth. We forecast 2026 revenue. So this is when they put the guidance out, which did not meet expectations. So just like I thought, they put it right at the end here. They are expecting ad revenue to double. But again, their forecast for Q1 came in below, the forecast. That's not good, and that's why it's sold off. So again, they're just going over the revenue growth again here. I just want to see if there's any commentary. It's content and engagement. With over 325 million paid memberships, we're now serving an audience approaching 1 billion people globally. Wow. Holy cow. Our aim is to delight and satisfy all of them by providing an amazing variety of series, films, and games so they stick around longer. Retention. And recommend Netflix to others and place a higher value on our service. Well, does that mean, so if customers place a higher value on your service, you're going to raise your prices again, right? Anyways, engagement remains one proxy to measure the health of the business. In case anyone's interested, some of the returning series, of course, the final season of Stranger Things, another show called Nobody Wants This, season 2, Selling Sunset, season 9. I don't know, what is that, a reality show or something? An anime series, Record of Ragnarok. Okay, was that like God of War or something? And then the Culinary Class War season 2. That's from Korea. Emily in Paris. So it's just some returning series that are getting additional seasons. And some new shows from around the world. The Beast and Me, The Asset, Rulers of Fortune, Last Samurai Standing. That sounds interesting. And then they got a bunch of docu-series, new stand-up specials. So Dave Chappelle's going to do, well, he's got a new stand-up special called The Unstoppable. Kevin Hart, Acting My Age. Leanne Morgan, Matt Rife, or Riff, however you pronounce it. So they got some comedy stand-up specials. And a broad slate of films. Frankenstein, which I think already came out. Wake Up Dead Man, A Knives Out Mystery, House of Dynamite, Jay Kelly, Train Dreams, Troll 2, and My Secret Santa. Just a little summary of the new shows and series they got going on. Let me see if I can find some commentary here. Okay. Product and innovation. Well, this is a 17-page PDF document. So if you want a copy of the 17-page document, this is basically their Q4 shareholder letter. I'll put the link here on the bottom of my screen. That'll take you right to where I got this PDF document. You can look at it, especially if you long-term Netflix investors out there. I'm sure you want to read this. They talk about cash flow, capital structure, all kinds of goodies in here. But with all of that said, they do have a negative reaction, and it's because they lowered Q1 guidance. That just sums it up, as simple as I can put it. And then, of course, their conference call with the CEO and the CFO. That's at 4:45 p.m. Eastern, which is 1:45 p.m. Pacific time for those over there on the West Coast. So good stuff. All right, cool. So we know what's up with Netflix. I'm going to move on from them. We got the chart pulled up on the left. We got our fib levels here. Resistance level number 1, 83.70. Resistance level number 2, 85.30. That's where I'm going to mark that. And that's just for post-market price action. Some easy fib levels just to keep in mind, where if those levels get reclaimed, then your confidence should be going up that this will retrace and possibly get back to 87 by tomorrow morning. But so far, I'm not seeing it. There's still a lot of work to do with this price. So we'll see. But let's jump over to United Airlines, the green earnings reaction that we got today, which I do trade the travel sector quite a bit. So I want to know why investors are really liking United Airlines right now, because this is nice. This turns into some multi-day, positive momentum for the travel sector. Maybe I'll open up some bullish spreads next Friday's expiration, like 10-day hold or something like that. Let's look at this graphic from the earnings correspondent. So they also double beat. EPS was down 5% year over year. Revenue was up 5% year over year. On a shorter term view, EPS was up 12% quarter over quarter. So that's nice. Revenue up 1% quarter over quarter. So the expected numbers for the EPS for this earnings report is $2.94. They reported 3.10, so they beat that. The revenue expectation for this report was 15.34 billion. They reported 15.39 billion. So double beat. The year over year and quarter over quarter numbers look okay. Let's see what else we can find as well. And let's take a look at this. They increased guidance. So you see the night and day difference here? Well, it's kind of the same theory. Both of these companies double beat. Netflix lowered guidance. United Airlines raised guidance. So it's clear as day what holds a lot of weight with these earnings reports is typically going to be the guidance. Investors, of course, are forward looking and they want to know what the company thinks, how they're going to perform in the future. United Airlines, their Q1 of this year, they increased the EPS. The estimate was $1. They increased it to $1.50. So that's a 50% increase on the forward guidance for Q1 for the EPS. That's a big deal. Okay, investors are loving that. All right, and they're expecting free cash flow for fiscal year 2026, the whole year, to be around 2.7 billion, which is similar to what 2025. Excuse me. All right, fleet and operations for United Airlines. 2026 deliveries, over 100 narrow-body aircraft and 20 Boeing 787s. Customer-first policies impacted Q4 pre-tax earnings by $250 million. And just to summarize United Airlines, United beat Q4 expectations with strong profitability. The airline is ramping up fleet expansion with 120 plus aircraft deliveries planned for this year while maintaining steady free cash flow generation. So this is positive all around for United Airlines. They beat EPS forecast, they beat revenue, and they increased guidance. That's a nice recipe for a bullish move, which they are doing right now. So let me put this United Airlines data here in the comments. I'll put that on the bottom of my screen. It's not letting me click it. That's okay. I threw it in the comments. I'll put it in the Discord. Okay, there we go. There's United Airlines. Just got a typo in there, but that's fine. Jake on Discord says, finally, in a few days that there's a stream when I'm online at Discord. Okay, cool. Yeah, no, it's good to have you here. These are earnings streams that I do every Tuesday, Wednesday, and Thursday. So 3 times a week, Tuesday, Wednesday, Thursday at 4 p.m. Eastern every day. I usually just come on here. I pick out 2 tickers that are popular, and we go over not only the stock price reaction and look at levels on some bigger time frames, see where some levels of demand are, levels of interest, levels of resistance, levels of supply, stuff like that. We look at the stock price reaction, and then we go over the EPS, the revenue, any guidance I can find. And then we find out what time they're going to do their earnings web call, and we figure out how to get there. So kind of like these streams are more, not so much the actual earnings call when they do their earnings web call, but more like a pre-earnings review before they do their call. And I like coming on here and doing that. And usually at the end of the stream, I usually go over some trades that I've been trading recently and stuff like that. But so anyways, United Airlines, solid beat. They increased guidance, and they got some nice expectations for this year, which are really impressing investors. little bit of commentary from the CEO of United Airlines, Scott Kirby. He says, our results are built on winning more and more brand loyal customers. It's clear they get the most value flying United. This was the highest revenue quarter in United States history and the highest quarterly of the year, providing strong revenue momentum that is continuing into 2026. So that's a pretty strong statement and commentary from the CEO, and investors are loving it. Okay. So looking good there. Again, they raised Q1 EPS up to $1.50. The estimate was only $1.16 on there, so that was good. And for the fiscal year EPS, the estimate was 13, and they raised the high end of that to 14. So good stuff. Good stuff. And the Q4 profitability, they had positive net income of $1 billion. It's great. And they are attributing a $250 million hit to pre-tax earnings because of when the government shut down. So they got a reason for that. And again, over 120 aircraft deliveries expected for this year. But that's amazing. You know, according to the CEO, it's the highest revenue quarter in United's history. So they're breaking records here. And they see the momentum continuing into 2026. So we know what's going on with both these stocks now, don't we? Let me draw a fib on this one and see where we're at. I'll put this right here. And kind of same thing with United, just the opposite is had a nice bullish move. Now it's coming back down to this 25% retrace. It's basically the opposite of what Netflix is doing, right? You can turn that off for now. So, you know, support 113 a share. That's the 25%. Or if we can get a nice bounce off that, maybe this makes a run towards after hours high. It's looking like it's trading sideways just above 113. So I like 113 as a shorter term level as far as post-market price action goes. So 113, and then I'm going to say 111 for S2. Those are the two levels I'd be watching to make sure United stays above one or the other. And we could get continuation into tomorrow, which again is nice to see after a day like today with all the selling with pretty much everything else. Only had a few stocks on my watch list that were green. Intel was one of them. SoFi was green at one point. I think it's red now. Let's see. Yeah, ended up being red. SoFi was green at one point, but Intel was nice and green, and a few others. Let's see. AA was a little green. Intel, of course. A lot of the money today was going into consumer defensive. More specifically, as far as the industries go, a lot of money was going into beverages and household products. So that's kind of where the money flow was going today. And I actually piggybacked off of that. I rode the wave. I like to do that. Like anytime we have, you know, a 2% down day on S&P and NASDAQ, I like to look and see where, okay, we know money's coming out of these sectors, but it's going somewhere. And you try and figure out where the money's going. And I saw consumer defensive was green as far as beverages and household products were all nice and green. So obvious money's going to that sector. So I ended up today, this afternoon, I opened up a spread trade on Coca-Cola. And I'll just go over that real quick for everybody. This is the Discord here. And this is my alert channel. So this was the spread I opened up today. It was on Coca-Cola, ticker symbol KO. Coca-Cola was trading at 71.47 when I opened the trade. I did a $1 wide put credit spread, also known as a bull put spread. So on one trade ticket using a margin account, of course, we're not using margin when we're trading this. As long as you have settled cash to cover the width of the spread, you're not technically using margin. It's just the broker is going to require a margin account to be able to form the spread. So and get your buying power needed, reduced. So I sold to open the 71 put, and then I bought to open the $70 put. So $100 in buying power for each spread. I did a handful of these. They were paying 18 bucks each. So that tells you right there what the return on capital potential is. If you got to put $100 up on hold while the trade's open, and you're getting $18 in credit when you open the trade, that's 18% potential return on capital, isn't it? This had almost a 70% chance of profit, or as Tasty Trade likes to call it, the pop rate, percentage of profit. But that was nice and good. And basically the idea behind the trade, the expiration date is the 23rd of January. You can see right here. And so it's, it's not like we're going to be locked, have to hold it forever, like 2 to 4 weeks or anything like that. When volatility is high, I prefer my spread trades to have a shorter expiration date, because I don't really want to be, locked into a trade for a long time when volatility is high. Because when VIX is, at 20 or above, we see a lot of price swings in either direction, typically to the downside when VIX is high. So I don't like being, married to these things when VIX is so high. So when VIX is high, my expiration date is usually short. And also the width of my spread, I like to keep nice and tight. That way, if it goes against you, the value of the long leg holds its value pretty good and does what it's intended to do. When volatility is really high, when VIX is really high, and your spreads are really wide, that you can run into some trouble there and see increased drawdown that you shouldn't be seeing if the width of the spread was more tighter. So when VIX is really low and volatility is low, that's when my spreads widen up a little bit. It's okay. It's more of a chance for the trade to work out according to the width of the spread. Kind of gives you a bit more cushion down to your long leg. But when volatility is high and we're expecting big price movements, I like my spreads tight and I like my expiration dates short. So this is January 23rd. This is only a 3-day hold. And to figure out the break even, option strat does it for us. But if you didn't have option strat, to figure out what your break even would be at expiration, you just take the strike that you sold to open, which would be the 71 put, which is the strike. Anytime it's a credit spread, it's the one you're selling to open is always going to be closer to the underlying stock price. That's how you can remember how to build out the credit spread correctly. And the one you buy to open is always further away from the underlying stock price than the one you're selling to open. So to find out what your break even is at expiration, you take the $71 strike that we sold to open, and then you're going to minus out the credit you received, which in this trade was 0.18. So that means on Friday, I need Coca-Cola to be above $70.82 on Friday, and this will be a winning trade. No problem. And let me go over to Coca-Cola's chart here. I'm going to put it United Airlines holding up pretty good up here above 113. That's nice. Netflix still trying to bottom out. It is trading sideways just above after hours low. So you have to keep your eye on that. Again, not out of the woods. It's got quite a few levels to retrace before I even consider this is going to be, clawing back its selling here. But for now, I'm going to put Coca-Cola on this right chart here because we actually entered this trade beautifully today. There's my break-even line at expiration. I like to put that on my chart. We'll go a 15-minute chart here. And it's looking like I just noticed that there was a huge buy-side imbalance on this all day, hence why the price action. But even when it started trading sideways right here this afternoon, this is kind of where I opened the spread trade at. And I know it's a little risky open up a put credit spread after it's already kind of rallied a little bit. But we had a few things going for us. Number one, we determined that there was a lot of money flowing into consumer defensive sector, more specifically the beverage and household product industries. So that's number one. I'm going where the money's going. Okay. And number two, it started trading sideways this afternoon, and I noticed there was still a pretty good buy side imbalance on the level 2 order book, which means even though it's trading sideways, the buyers are still beating the sellers, and that's just kind of signals that, okay, it's trading sideways, it's probably in some sort of consolidation or accumulation phase, gearing up for the next leg up. And then sure enough, to close out the regular session, it did make a new high. So I feel really good about this trade. It's only a 3-day hold. I just want Coca-Cola to stay above $70.82 a share by Friday, and this will be a winning trade without a doubt. All right, and also just to recap, this is my my 8th spread trade. I've had 7 winning spread trades in a row. This is the 7 spread trades I've done. Basically the month of December and then in January. I try and do 1 spread trade a week. Sometimes I do 2 a week. And my last losing spread trade was this SPY hedge trade, which was more like insurance. So I really didn't care if that went up to 0, which it did. But I was just buying insurance so I can sleep at night. So that's fine. You know, the money I spent on that hedge trade was a drop in the bucket compared to the money I made on my long positions that I was actually trying to hedge, if that makes sense. I'd run a lot of the wheel strategy. This is a wheel that just fully rotated for me. I've been wheeling UMAC for about 90 days. I was using $2,400 in buying power, and the wheel fully rotated and my shares got called away. I walked away with a total profit of $472 on $2,400 in buying power, which gave me a 19.6% return on capital in 3.5 months, which is solid, you know, you know, mathematically, the annualized rate of return, if I did a similar trade like that every 3 months, it's about 67% annualized rate of return. Every 3.5 months, you get 19.6% trading like this, which I'm totally happy for. I'm just trying to beat the S&P annual average by 2x or 3x or more. You know, some years I beat it. You know, I get 40%. Some years only 15, 20%. You know, but if I can, you know, average like a 3x beat, then I know I can double my money every 3-4 years, you know. So that's good. That's what I try and do. So that was the UMAC wheel. That was a beautiful trade. And I post all my trades in the Discord, and they all know exactly when I'm alerting them, and I make sure I got skin in the game. This is a screenshot from my Fidelity account, and this was the profit I made on the shares when my shares got called away, and then of course my 2 covered call contracts. And the credit I received on the cash secured put trade that I got assigned on was actually built into my shares, the profit on the shares. So this is what a full wheel looks like. I did 1 round of cash secured put. I got assigned. I ended up being able to get away with 2 rounds of covered calls. And then my shares ended up getting called away on the 2nd round. And I walked away with a total profit of $472. Just using $2,400 in buying power. So I was very happy with that return. This was a NVIDIA spread I did last week. Got 77% on that. I didn't get rich on it, but hey, it was an easy $85. And this was the setup on that spread here. Another $1 wide spread. Paid $22 credit per spread, so that's 22%. Potential return on capital and chance of profit on that was 74%. So that was a nice one. And then this was a SoFi spread, easy $100. I do these every week, so it was a nice 75% there. This was a Google spread, 72% on that one. So again, I mean, you know, I know I'm not getting filthy rich off this, but hey, you get $100 here, $100 there, and you're doing a bunch. You know, it really does add up. At the end of the month, you're up a few $1,000, and you're loving it. Let's see what else we got here. That was the Google spread. I'm just trying to give everyone an idea of the trades I do. This was a spread on Bull. Got 78% on that one. Another 150 in the bank. Looks like quite a few people took that one. Lots of emojis there. And okay, so that was the Bull spread. That was the setup for the Bull spread. This was a fun one because it was only 50-cent wide spread. So you only need $50 in buying power for 1 spread on this. But it paid $19 a spread divided by your buying power used. That's a 38% potential return on capital. So I was very happy with that. 61% chance of profit on that one, which ended up being a winner, so that's good. This was a Disney spread. Got 41% on that. I know it wasn't a lot, but hey, another 57 bucks in the bank. Fine. I'll take it. This was a Mara spread. Got 52% on that. Another 9. So you can see how it just adds up, you know. I target income, you know. I want a certain amount of money every month, you know, and that's just what I do. I target weekly or monthly income. Sometimes I do bi-weekly trades, you know. But it's a lot of fun, and that's what I teach in the Discord. More of like advanced options trading, and I have a lot of fun. So if you want to get these trades in real time, you got to join the Discord. There's some links in the description to navigate you there. And also, I'll end the stream by saying I'll give something out for free, because you know I'm not here to be a salesman. I'm here to hang out and go over earnings reports and have fun mainly. All right, but of course we do got a business to run, and that's what it is. But if you're looking for 4 high probability trade setups sent to your inbox every morning at 9 a.m. Eastern, check that very first link in the description. It's free to sign up. It doesn't cost anything. I'm all about giving out free stuff. We've gotten a lot of great feedback on that. So, but yeah, other than that, I hope everyone enjoyed the stream. My name's The Swinging Bull on Discord. Let me put my name back on the screen there. There you go. With PB alerts. I'll be back again for another earnings stream tomorrow at 4 p.m. And let's just take a quick look at who's reporting tomorrow, just so we know. 18 companies reporting tomorrow. So we got Kinder Morgan. I think I'm going to cover them. And then CACI is also reporting. Those are the $2 billion revenue companies. So that's probably the more popular ones. And then again, we got more financial institutions reporting. Bank of California, Pinnacle Financial, Eagle Bancorp. It's a lot of banks, financial companies reporting this week. You got Fulton Financial, Great Southern Bancorp, Horizon Bank. So it's kind of like bank week this week, you know, outside of Netflix and United Airlines we did today. But today is very bank and financial company heavy as far as earnings go. And then on Thursday, we got, how many companies? On Thursday, there's 25 companies reporting after the close. Thursday should be a bit of fun. We got Intel. Looking forward to seeing their earnings results, especially after NVIDIA has made such a big investment in them. What was it, like $5 billion or more? So I'm interested in Intel's earnings report. We got Capital One reporting also on Thursday. So those are the 2 I'm probably going to cover. But we also have Intuitive Surgical, that they're a $1 billion revenue company. You got AA, which is Alcoa Inc. I was running diagonal calendar spreads on this with our Discord members. And we had like 8 winning trades in a row on that thing and made some good money on it. So I may take a peek at them. And then CSX, the railroad company, they're also reporting on Thursday. Alaska Air, another airline. Alaska Air Group. I'm not sure if they build planes or they're airline. I think it's an airline, right? Alaska Air. I'll find out later. And then some more banking. You know, again, this week is very bank and financial company heavy as far as earnings go. So it's just a ton more banks. Sallie Mae reporting. USCB Financial. So anyways, just a little preview of the rest of the earnings this week. But yeah, other than that, I hope everyone enjoyed the stream. If anyone in the Discord ever needs anything, just shoot me a DM. You know, I'm always there for you. Even if you just have a question or you want to bounce something, a trade idea off me, I'll definitely give you what I think about it. But yeah, hope everyone has a great night. And until next time, I'll see everyone in the very next stream. Cheers.